All right, let's get right into it. Today, we're cracking open a really in-depth analyst report. This one's from Web Cornucopia, and it's all about Nuvama Wealth Management. We're going to break down their deep dive into the company's numbers, its big picture strategy, and what this report sees as a huge growth story just waiting to happen in India. So the report doesn't waste any time. It kicks things off with a super bold call, a target price of 8,200 rupees a share for Nuvama. Now, just to give you some context, that is a massive potential jump from where the stock is trading today. A number that big makes you ask, right? What exactly are they seeing that maybe the rest of us are missing? So, the big question is Nuvama Wealth really India's next massive growth story? This report definitely thinks so, and it makes a really strong case. So let's do this. Let's walk through the evidence they present and see exactly how they got to that incredible conclusion. Okay, first things first, to really get the case for Nuvama, you have to understand the giant economic wave it's riding. The absolute bedrock of this whole investment idea is the incredible boom that's happening right now in India's wealth sector. And here's the starting point for that story. Just look at the sheer size of the market today. We're talking 15 lakh crores in assets held by high net worth individuals. That is a staggering amount of money. And according to this report, believe it or not, this is just the beginning. But this is where things get wild. The report projects that by 2030, this market is going to surge to 75 lakh crores. That's not just a little bit of growth, that's a five-fold explosion in under a decade. We're talking about one of the biggest wealth creation events happening anywhere on the globe. So what's behind all this? It's the people. The number of high net worth individuals in India is climbing by 9 to 11% every single year. The report points out this is the fastest rate of growth in the world. And this isn't just some abstract number on a chart. It represents a rapidly expanding base of customers who need smart financial advice. So what's fueling this engine? Well, the report zeroes in on four key drivers. There's a huge cultural shift from physical things like gold and property into financial investments. There's a massive transfer of wealth between generations coming up. Technology is making everything better and easier, and the government's policies are helping the industry grow. It's basically the perfect storm for a company like Nuvama. All right, so with that massive backdrop in mind, let's zoom in on Nuvama itself. How exactly is this company set up to grab a piece of this absolutely enormous pie? The report gets right into their business model. So first off, who are they? Well, Nuvama is a heavyweight in India's financial world, managing over 4.2 lakh crores in assets. Their bread and butter is wealth management for affluent clients, but they've also got strong businesses in institutional stocks and investment banking. And if you look at where their money comes from, you really start to see their game plan. Wealth management is the heart of the operation, making up 52%. But having those other segments is so important for diversification. It means if one area has a tough quarter, it doesn't sink the whole ship. It gives them some real stability. And this leads to a huge strategic advantage the report highlights. Nuvama's business is what you'd call capital light. See, they don't have to build huge, expensive factories to grow. As they bring in more money to manage, their revenues can soar, but their costs barely budge. And that, my friends, is a powerful recipe for profitability. Okay, the story sounds good. The strategy seems smart, but do the numbers actually back it up? Let's get to the hard data from the report and see what the performance really looks like. And yeah, the data seems to tell a pretty clear story. Just look at the revenue growth from fiscal year 2020 all the way to the projections for 25. You can see this really strong, consistent upward climb. This isn't just a little bump. It's a major expansion that shows their business model is absolutely firing on all cylinders. Now, this next number is really important, 21.4%. That's Nuvama's return on equity, or ROE. Put simply, it tells you how good the company is at making profits with the money investors have put in. The report says anything over 20% is considered top-notch, so this number is basically screaming that this is a highly efficient, very profitable machine. And it's not just about profits. The company's financial health seems to be getting stronger too. This little table shows what's called the gross NPA ratio. That's just a fancy term for the percentage of their loans that might go bad. The fact that it's dropped so much, almost in half, is a fantastic sign. It suggests they're making better lending decisions, which lowers their overall risk. Now, let's talk about the quality of the money they're making. The report really hammers this point home. 72% of their revenue comes from steady, recurring fees, not from the ups and downs of market trading. This gives the company and its investors a much more stable and predictable stream of income. That's the kind of stability you love to see. But, of course, no investment is a one-way street. A good analysis has to look at the other side of the coin, and the report does just that, dedicating a whole section to the potential risks and the arguments against Nuvama. And this right here, this is the core debate. On one hand, the bulls are looking at this huge, untapped market and a fantastic business model. But on the other hand, the bears are saying, hang on, the stock price already looks pretty expensive, competition is getting fierce, and at the end of the day, their business still depends on a healthy stock market. The report boils these worries down into 4 main risks. Valuation is a big one. When a stock's price is this high, there's not much room for mistakes. Then you've got competition from hungry fintech startups and big banks. There's always the risk of a market slump. And, of course, the government could always change the rules of the game. These are the things that could definitely throw a wrench in the works. So, with this huge opportunity on one side and some very real risks on the other, how does the report actually weigh it all out? Well, this is where they pull everything together, using their own scoring system to give a final verdict. Let's walk through their scorecard. You can see financial health and growth prospects get really high scores, both above 8. Their competitive position and management team also score well. But then, look at valuation, a much lower 6.2. This really confirms what we were just talking about. The price is the one area where they have some reservations. So after weighing all of that, the report calculates a final score, 7.6 out of 10. Now, in their system, a score in this range puts the company in the proficient category. So what does that mean? It means they see a really strong company with great prospects, but one that has a few challenges to navigate. And in this case, that big challenge is the high valuation. And the report wraps it all up with this one powerful summary. Nuvama Wealth Management represents a high-quality play on India's structural wealth creation story. That pretty much says it all. Which really leaves us with the million-dollar question for anyone looking at this company. Does a premium business operating in a super high-growth market justify paying a premium price for its stock? This report makes a pretty compelling case that, yeah, it does. It's that classic debate, right? Value versus growth. And in this particular case, the analysts come down firmly on the side of growth.